This week, we're talking livestock slaughter, we'll get into cold storage numbers, and we're going to talk food price outlook. Welcome to the weekly livestock market update on Brownfield. I'm your host, Meghan Grebner. With us this week is University of Tennessee's Charley Martinez. Charley, great to see you.
Good to see you. Glad to be back.
Always good to catch up. We're going to get into some of these reports in a little bit, but first, let's recap another wild and crazy week in these markets.
Yeah, I think wild and crazy is an understatement to a certain extent, but live cattle prices closed today at $2.11 5 cents. And, you know, relatively speaking, I know there's reports that have come out that there's numbers that are higher, but trade volume was really low this week in certain areas. And so it was kind of the number that we got, but we know that there's other reports out there. But that at $2.11 5 cents, that's actually 58 cents down from last week. But I think that at the time of the recording, and that's when we're doing this, I think there's actually some other bigger numbers out there depending upon where you are in the country. But moving on to some other things that were pretty interesting for the week, June live cattle prices ended at $2.08 30 cents, which was actually up a pretty good number at $4.23 compared to a week ago. The May feeder cattle futures prices ended at $290.65, which was actually up another big number, $3.80 compared to a week ago. If we think about that real quick, I want to put a pause button there. We know that we didn't have, the markets there on Friday last week with Good Friday, and we know we're switching contracts. And so there could be some, if we're thinking about it, there could have been some more wiggle room there if we had that extra day, but still big numbers on the week. Choice box beef closed at $331.97, which is down 1% from last week. Select box beef was up to $314.52, which was down just a measly 4 cents compared to last week, so relatively stayed unchanged. On the pork side of things, the pork cutout was closing at $100.81, which is up 8%. So an 8% is actually $7.54 compared to last week. That is a massive jump that we saw. It's roughly over 1% a day on the week. National Base Hog Carcass was up to $86.35, which was also higher at 3% higher compared to a week ago. And then switching gears, May lean hog future closed at $92.90, which was up 3% or $2.50 compared to a week ago. So I think in the futures markets, we saw a lot of swings in both the beef and pork sector. Some of that probably could be some movement just with the change in contracts, but also I think people are still kind of rebounding from the tariff scare that we had a couple of weeks ago, and prices are finally getting back to where they were prior to that for the most part, and having some steam for the most part as well.
I think it's interesting to bring up the tariff conversation, and this is something that I think we're going to probably touch on week to week because things are changing constantly. When you look at the export sales report on the hog side of things, this week we saw a massive cancellation from China, and we've seen China noticeably absent from all purchases of ag goods. I know that this is in this negotiation tactic, and that's the goal of this administration, but how concerning is it that we're seeing massive cancellations? We're not buying other products. China's not a player on beef purchases right now, just in the overall ability for markets that rely so heavily on global demand.
Yeah, so I think right there at the end is what you hit on is the most important part, is that if we go back the last 5 to 6 years, that market was a very important location for a lot of our products to go to. And especially in the beef market, we saw them really come on strong in 2020, 2021, where they basically became, top 3 destination, sometimes more depending upon the time of the year. They became a really important destination. I think those kind of cancellations in the short run, I think causes some unsureness and uncertainty, therefore some volatility that we're going to see. And it could be the function of also underlining some of these upswings that we're seeing. There could be something that the market knows, or it's simply convergence of certain things. But I think in the long run, if we continue to lose an important market like that, that's a repeal in demand. And so we know if demand goes down, that's going to affect prices. And then the question becomes, if we go on for an extended period of time without that market, where do we move that product? Do we move it to other countries? Do we keep it here domestically and try to think about product mixes with those products? We might see some more, increased supply of sausage, for instance. Things like that becomes the next question in terms of what do you do with the product, because we do have a perishable good. Do you put it in the freezer and freeze it? There's other questions that have to happen from a production standpoint, but from a pricing standpoint, we know that that's going to have impacts. The question becomes, one, do we see China start buying again here in the next couple of weeks, or do we see months of them not buying at all? And those impacts are different throughout the supply chains. And so I think regardless of the protein sector and regardless of almost any agriculture sector, losing China as a destination or trade location for product to go to is going to have impacts throughout the supply chain.
Weekly slaughter out this week as we take a look at cattle and hog slaughter for the week. Obviously, a slower day last Friday and Saturday because of the Easter holiday. But as we take a look at these numbers, how are we stacking up week over week, but then also thinking about our year-to-date comparisons?
Yeah, so cattle slaughter for the week was right at 555,000 head of cattle, down 21,000 head on the week or compared to a week ago, and nearly 58,723 head compared to a year ago. So one, we know that that's going to be, the 58,000 is a big number. That's going to be a function of the Easter holiday. And so we take out a large chunk of production there on a day. And we probably lose some of the Saturday production that will occur at some of the plants as well. And so we see that big number, and it's like, well, we got to understand, put that in context. And so I think to your point on year-to-date cattle slaughter is down 5.8%. If we think about in terms of percentage, every time I've come on with you this year, it's roughly around that number. So we're kind of holding steady, at the pace that we're at relative to the numbers that we have. So the percentages have been roughly the same. So we're keeping up at the same pace, but we just have fewer head out there. On the hog slaughter, kind of a similar story. Hog slaughter for the week was at 2.43 million head. That was actually up 59,000 head on the year or on the week, and then up around 52,156 on the year. And then year to date, hog slaughter is down 2.8%. And so whenever I look at the 2.8%, I compare that to when I was on with you 2 weeks ago, and we were down 2.9% compared to the year prior, or a year-over-year change. And so we actually closed that gap by 0.1%. But I do think we're still on roughly the same pace as we were last year as well. We know we're going to start seeing some uptick in getting ready for the grilling season here pretty soon. So I know that, we look at these numbers, and some of them are a bit different in terms of total volume changes compared to a year ago, but we have to keep in mind the holiday. But also, if we just look at the year-over-year or year-over-year change, we're relatively still on the same pace. And so some of that's going to be a function of just the marginal change of supply that we had relative to right now compared to last year.
It's a great analysis and synopsis going into livestock slaughter for 2024, because as we take a look at that production number, kind of an interesting comparison when you think at where numbers are and where we are in terms of beef and pork production. Yeah,
so one of the reports that come out is the annual livestock slaughter report. And so we got the 2024 report earlier this week. And one of the things that kind of stuck out was as we compared, if we think back in time, 2024 compared to 2023, we knew we had tighter supplies. But when we look at total red meat production for the U.S. totaled 55 billion pounds in 2024, and that was actually 1% higher than 2023. So tighter supplies, but we produced more. And we know that throughout the time we've been talking this year, we know slaughter weights are up. And so as we start diving down into certain segments, that kind of comes to fruition. So on the commercial cattle slaughter side of things, commercial cattle slaughtered during 2024 totaled 31.8 million head, down 3% from 2023. So that's our number there of tighter supplies. If we think about the live weights, though, average live weight was just under 1,400 pounds at 1,399 pounds. That number alone, though, that is up 34 pounds from a year ago. So if we think that in percentages, that's a much bigger percent in terms of weight increase when we're slaughtering animals versus that total supply being pulled back by 3%. One of the things that I like looking at is just kind of the mix of the total slaughter on the cattle side. So steers comprised 48.6% of total federally inspected cattle. Heifers was 32%. Dairy cows was 8.7%. Cows in general, so other cows was 9.1%, and bulls 1.6%. And so, we see the mix there of the steers to heifers. We still, we've talked about cattle on feed. I know Kenny was talking about it last week in terms of the herd or the demographic of heifers in the feed yards. And so, the kind of jives of what we're seeing, and the heifers going in there and making up, roughly 1/3 of what we're slaughtering. Switching gears to the hog sector, commercial hog slaughter totaled 130 million head, or up actually 1% compared to 2023. And so, again, we see there that we have more head being slaughtered compared to the previous year. But the big thing that stuck out to me was the pounds again. So average live weight was up 1 pound last year at 288 pounds. And so if we take 1 pound over 130 million head on average, that's a pretty big difference in terms of production, right? So we see that in the cattle side we have tighter supplies, but much bigger increases in weights. On commercial hog, we had actually a 1% increase in head count, but also we had a 1 pound increase in total weights, or on average pounds per animal. And so it's kind of interesting to think about just the dynamic of last year, looking back in retrospect compared to where we were in 2023, and kind of thinking about where we are in 2025, just talking about we're down 5.8 on average in the cattle side of things, of cattle being slaughtered, and 2.8 on the hog side. One of the other unique things about that report that kind of, at first it was kind of like, what? And then it was kind of like, okay, that doesn't make sense. Last year, there was 1,089 plants slaughtering under federal inspection as of January 1 of 2025, compared to 1,012 the previous year. So if we think about that, there's been an influx of these federally inspected plants occurring we almost had 100 more online over the year difference. And at first I was like, man, that seems kind of odd that we would have that much more increased federal, inspected capacity given a time when we have tighter supplies. But one thing we got to think about is, and I'll use Tennessee as a prime example, we've gone in Tennessee from having roughly 17, 18 federally inspected plants up to over 30 now here in Tennessee alone. And I know I see that across the state. I know in the Midwest and like Missouri and Nebraska, there's other plants that are even being talked about coming online pretty soon. And so it's kind of interesting to see that number, just because if we think about tighter supplies, higher prices, thinking about what's that mean to the U.S. consumer and how does that impact, the fed cattle market, the slaughter hog market. We actually have people coming online. I would suspect, though, that the ones that did come online are not relatively large in size. They're probably small in size, and especially here in Tennessee, we know we got some of those, or I know we have some of those that are not slaughtering at like huge capacities by any means. But it's something that has kind of been a function of coming off of COVID, people saying, I want to have more locally produced protein. So people started either building packing plants, or groups of people got together and have built some especially across the Southeast, but I know it's happened across the country as a function of COVID-19. So that was kind of interesting.
And we also saw under the previous administration those grants to facilitate and diversify and add more processing facilities. And so I would assume a lot of those that started in 2021, 2022 are online at this point.
Yeah,
right?
So that's a really good point. The COVID money That was a really big kicker here in Tennessee, the federal funding to get those up and running, just because there was money there from a federal side. People got together and said, hey, if I can get this funding, that's capital that I don't have to go borrow, and we can try to do something with it. We can try to do something with that money in terms of having impact at a from a local perspective. So, that is, I would suspect that is a big reason why we saw that number increase. And again, I think it's going to be more of the smaller, local type slaughter facilities that are getting federally inspected. And I know from a state perspective, there are other states that are putting in meat inspection programs that can kind of help alleviate some of the federal side of things as well, in terms of having an inspector there at all times. And so I'll use Tennessee as the backdrop. We just passed a law this past week for meat inspection and trying to help people, from a labeling perspective, what can be deemed for resale versus not. And I know that's happening in other states as well.
Cold storage out this week, and as we take a look at that, really kind of a function of, I would assume, supply and demand both. As you take a look at those numbers, does anything stick out on the beef or pork side?
Yeah, so total beef in storage was down 2% from February going into March. It was actually still 1% higher than where we were last year in March. But inside the beef side of things, majority of the change was happening with the boneless side of things, which was down 3%. That's what makes up a majority of our beef in storage is the boneless product. There was some beef cuts that was still stored at a clip of 7% more from February into March. But again, majority of the stuff that we know or that is in storage is going to be boneless product, and so that's what was driving that number down. On the pork side, pork remained relatively unchanged going from February to March. It was still up 1% compared to last year. But one of the numbers that stuck out that I was like, of course, because selfishly I look at this number a lot, is pork bellies. So stock of pork bellies was actually up 14% over the month, but is still down 26% compared to last year. So it's kind of, you have this massive jump of 14% up, and then you look and it's like, well, relatively speaking, it's still really low compared to where we were last year. And so as we see prices where they are and the amount of pork that we're making and the number of animals that we're slaughtering, I would expect that number to probably increase again next month. But also we know grilling season's coming. So it's, what makes a burger better is having a slice of bacon on it. So it's one of those deals that you never know what the consumer is going to want, and so I'll be interested to see what that number does next month.
I will shock you. I don't want bacon on my burger.
Well, some people, not me, but some people might say you're eating the burger wrong.
But I think it's interesting. One, I've also resigned. You have small children as well. Our kids are very close in age. I have given up to the fact that I will see $2.99 bacon at the store ever again for really good bacon, right? And just have accepted the fact that it's going to be one of the most expensive portions of my grocery bill every week. But I think other cuts of pork are so undervalued. Give me a great pork chop on the grill, and I wish consumers would think outside of the box when they think about picking up meat at the meat case as well. Because yes, steaks are great, burgers are great, but also don't miss out on a great juicy pork chop. Yeah,
no, you got it right. When we go to I'll say nice restaurants, the menu is obviously, a steak or a pork chop, and there are certain restaurants that I go to specifically for the pork chop, and they'll hand me the menu and it's like, I don't need that. I know exactly what I'm going to get. And a nice, a thick, juicy pork chop done right, it's hard to beat.
We should have a grilling episode sometime this summer. Talk about all the great things.
If we get that, there's some economists that will happily join on, like David Anderson. He He loves talking barbecue.
We can talk barbecue. We can talk lengua. Like, let's get out all the great things that folks are underappreciating when it comes to different cuts or different parts to put on the grill. Okay. As we wrap up today, food price outlook also out this week. I think one of the interesting components of this conversation, Charley, is the fact that despite increasing prices, we're still seeing strong demand from consumers for both beef and pork relatively in the retail space.
Yeah, so we've talked about it where, we saw prices get to all-time highs last year, but demand was still pretty strong across the board. And in particular to the beef side, it was the highest we have seen in the last 24 years. And so in the food price outlook, there's a number in there called the CPI. For the folks that don't know what that is, it's the Consumer Price Index, and basically all that does is measure the monthly change in prices paid by U.S. consumers. And so going from February to March, beef was actually up 1.6%, and pork actually increased 2.2%. So both protein sectors, from a consumer perspective, the CPI went up over the month. Year-over-year change, though, was kind of the number that was kind of interesting to me. Beef was up 8.6% compared to last year, and pork was up 2.9%. So we see an increase across both proteins, both of those proteins, but a big increase happening year-over-year change on the beef side. And so to me, that starts the conversation in terms of are we going to be reaching that threshold of the willingness to pay by the U.S. consumer for beef? On the pork side of things, it seems that we've increased, at a relatively steady rate, whereas the beef side of things, we're increasing at a much larger pace. And so that'll be something for me to really monitor, and something I'm going to be interested in moving forward. Another cool stat that comes in that report, though, is also the PPI. It's the Producer Price Index. And so for the folks that don't know, it measures the average change over time in the selling prices received by domestic producers for their output. So that's a lot of economic jargon, basically, to think about, okay, what are the people getting for the product that they are producing relative to what is happening over time. And so on the farm level side, from February into March, it was actually increasing by 0.4%. So relatively, PPI increased, almost 0.5%. But the one thing that was really interesting to me was that a year-over-year change, that number was 10%. So people getting more for what they're selling at the farm level, and so that number to me was something that really stuck out. And so that to me is also a sign of we've talked about higher prices. And, throughout the supply chain, is that working its way through at the farm level? It seems to be, as we get increases in inputs, they're actually still getting increases on what they're selling. So that's a good sign from a producer standpoint. I would be interested to see that these numbers, next month, given the fact that we've had so much volatility. I would like to see how they change over the month. Those 2-week periods of prices really not having any positivity have really a really big effect or not. That'd be really interesting to see next month.
And I think it's a good reminder that farmers are price takers, not price makers. So to see this kind of increase really shows I would assume demand strength, right?
Yep.
Yeah. It's a whole different market. It's a whole different element when you think about commodity markets opposed to other types of markets.
Yeah, you hit the nail on the head. I would also, from a price taker standpoint, I would also contend that's what makes us more risk tolerant or more risk loving in agriculture. If you're in production, than you really think about, because you're really a price taker. Which, not to keep being on the soapbox, but that's why risk management is so important. If you don't have any control over the price, at least try to control the volatility of that price as much as you can, which then gives you some type of control.
On that note, Charley, we will see you next go round.
Yes, ma'am.
To have our weekly livestock market update delivered to your email box every Saturday morning, go to brownfieldagnews.com. You can also submit questions and comments. And for market updates twice daily, make sure to check out the Market Minute. Have a great weekend. I'm Meghan Grebner for Brownfield.